Hello everybody, this is Simon Clark from Trade with Precision, discussing some of my key markets of interest this week. Now, before we go and take a look at some new markets, I just want to do a quick review of the two markets that I was discussing last week. So this was the dollar yen and also silver. So if we take a quick look at dollar yen, last week the market was back up here around the sort of 105 area, just up around the sort of low of this bearish candle. If you can remember, what we were looking for was a move down here to the sort of parity level, down to that 100 level. The market has now continued to move down to there, and now it's reached that sort of parity level. So what now with dollar yen? Well, if I just sort of open up the chart here on the weekly time frame, we can see that the markets, well, the trend has continued as expected. It's sort of come down to that 100 level. But if I start to zoom out of this slightly, we can start to see that the 100 area here sort of coincides with quite a bit of price congestion through here. So it's been a sort of a zone of previous support and resistance in the market too. That together as well at the moment, again probably fueled here by the news of the UK referendum as well, which has just sort of helped this trend to continue. The market's a little bit overstretched here from the moving averages. So one thing when I start to look at this, coming up to previous sort of support and resistance structures, I might expect a bit of a pullback in price. Certainly here I'm not looking for the market to continue lower before we have some kind of consolidation around this sort of 100 level. The idea of a consolidation here, or a bit of a pause here in momentum, is also supported by a little bit of weakness starting to come into the momentum that we can start to see on some of these lower time frames. If I come down to the daily time frame here, for example, we can see that whilst the MACD looks okay, the MACD is converging here, we've actually got a bit of divergence coming in here on the RSI. So that's sort of coinciding with this low and test of the 100 level. So again, just supporting the sort of idea here of a bit of a pullback, bit of a consolidation before any sort of redecision of the 100 level is made. Now, if we come and take a look also at the silver market, so come and take a quick look at silver and come back to the weekly chart here on silver. Now, if you recall a couple of weeks ago, what I was looking for here on silver was I was looking for the market to continue higher. I was looking for a retest up here around this sort of $18 level as sort of first port of call. Now, what's happened is the market has continued in that direction. We've continued to see sort of strength in most of the metal markets, and this is just a sign again of increased volatility in the markets. These metal markets, and especially sort of precious metals, tend to be seen as places of safe havens, and that's just again fueled and supported the rise in gold and silver. So what now for silver, looking around these levels? So it's reached the first target that we were sort of looking for up here. If I sort of come and take a look at, just sort of zoom out of this slightly, we can see that the $18 level, it's certainly an area here of sort of previous sort of support and resistance. In the context of the trend here, we've still got the trend in play, but again, what I'm looking for here is a bit of a pullback in price, a bit of maybe a consolidation to get a decisive break of this level before starting to look for continued move up here towards the $20 level. Still like the idea here of the market's long. There's still supports fundamentally that we should be looking for safe havens in times of volatility. So this still supports this idea of rising prices, and I just sort of want to see a bit of a consolidation again before we start to see the next leg of the trend here. Now let's take a look at a couple of new markets, and of course the UK referendum has had a big impact on many of the world's markets. So let's go and take a look at the Great British Pound against the dollar. This is probably the currency pair that's been biggest or most affected by the Brexit news. So big move to the short side. We can see this here on the monthly chart. So the market was in a downtrend anyway, but the move has been sort of like really quite significant. If I open up the monthly chart here, we can start to see some sort of perspective of the move. It's markets moved lower than the previous low sort of created here by the great financial crisis of 2008. So quite a significant move, and when we see a big move like this, whether the market's still going to continue to move down, the immediate sort of move that I look for is a bit of retracement in the market. Just supports the sort of unwinding of positions and price pulling back to some sort of area of equilibrium before continued decisions can be made. So where does that leave the market here? So if I come and take a look at the weekly chart and just start to come down, we can see that we've started to have a bit of a move higher here on the Great British Pound. So it started to retrace a bit already. What I look for is there any areas here where the market may retrace to? Is there any sort of zones where we could start to look for retracement where the market may pull back to? Now certainly at this moment in time we've certainly got a lot of clear space at this moment, but we have got some sort of area through here back up towards this sort of 140 level. If I just sort of zoom right the way out of this, again I want to come right the way back to get some sort of perspective here, and I'm just going to draw a couple of levels in here. So if I get my support and resistance line, so just a sort of around this sort of area, so it's around sort of 1.4, 1.41. It's been a zone of previous support in the past. It's also been a area of previous price interaction. So if I just sort of zoom into this and start to look here, we can see that more recently, even though we've seen that in the past history, even more recently, this sort of 141 is the sort of roundish number I would see here. It's been tested many times before. Now what we can also start to do is to add a fib study in here from the recent leg of the trend. So that's the recent high, top of the move, down to the low, and again we can start to see, if I sort of zoom into this a little bit more, we can start to see the analysis here a little bit more clearly. So a reasonable retracement here of a big move like this could be a sort of a 50% retracement of the move. That also happens to coincide with this level. So we've got a couple of things occurring here at this sort of price point around sort of 140, 141 in cable. Now at this moment in time here on the weekly chart, we don't see don't see an awful lot of evidence of the market starting to turn around. If we start to come down to the daily time frame and the intraday time frames, again we can start to see now some bullish momentum coming back into the market. Now whether the market's going to retrace back up to these sort of levels up here around that we're talking around, we need to wait and see. I mean, there's certainly going to be quite a bit of news flow coming through over the coming days and weeks, which may have an impact on this market. But certainly at the moment we're starting to see some intraday time frames on the 4-hour time frames and below of upward trends and retracements. So certainly I'll be looking for opportunities on those intraday time frames, looking to trade the retracement back up. And as if the trend continues, then I'll be looking for a decision point up here around the sort of 141 level. Now the next market I want to take a look at is the bonds, and the one that I'm particularly interested in here is Eurobund. If we think about things from a fundamental perspective, first of all, we normally expect to see a negative correlation between bonds and stocks. You find that at the moment where we've got increased volatility in stocks, a lot of stock markets have retraced, and there's a peeling off of sensation here of peeling off of risk. When that tends to happen, it tends to be supportive of bonds, as bonds tend to be more of a safe haven instrument. Now, that aside, we can certainly see that this market has been strong. It's been in a strong uptrend for some time anyway. This is the monthly chart, and we can see over a period of years here that Eurobund has been rising. So again, just supportive, the fundamental environment should be supportive of the trend here continuing. So if we take a look at this on the weekly chart, there's a sort of an area up here that I've been particularly interested in. If I get my drawing tools and put a level in here, just underneath this sort of 167 level, we can see that the market sort of been in a sideways consolidation. So we've had a nice move, had a pullback, had a consolidation period, had a move higher. Now we've got a consolidation period, and we've just broken out of that. The high here has been tested good 3 times before now sort of breaking through. So again, just supportive of continued next leg of this trend continuing. If we start to come down the time frames, and if we come down into the daily time frame, we can see the effect of the Brexit news having on this market. We can see that the news has been positive for this market. So the market did gap up. It rallied up here just underneath sort of 170. It's had a retracement back to the level. It's sort of hit it on the nose, and now the market's starting to bounce off it again. So again, starting to look at the intraday time frames here for opportunities to get positioned to be able to continue to trade the Eurobund long in the direction of these higher time frame trends. So that's the markets that I'm keeping a close eye on over the next couple of weeks for trading opportunities. Certainly hope it helps, and look forward to speaking to you next time. Bye for now.